Credit cards explained like you're 5. This is you. You have money, you spend money. When you run out of money, you stop spending. At least, that's how money used to work. Then, someone invented the credit card, and suddenly, running out of money was no longer enough to stop you from spending money. Amazing. Also, potentially terrible. So today, I'm going to explain exactly how credit cards work, like you're 5, because apparently, we decided that everyone should be allowed to borrow thousands of dollars before making sure they actually understand what interest means. So, let's fix that. What is a credit card? Let's say you want to buy a new TV. The TV costs $1,000. You check your bank account. You have $200. This should be the end of the story. But then, the bank appears. The bank says, "Don't worry. You can use my money." Interesting. The bank gives you a magical piece of plastic. You take the plastic to the store. You buy the $1,000 TV. You go home. You still have $200 in your bank account. And you have a new TV. You feel rich. You are not rich. You are now $800 poorer than the person who simply had $0 because you owe the bank $1,000. This is the first thing you need to understand about credit cards. When you use a debit card, you're spending your money. When you use a credit card, you're spending the bank's money. And the bank would eventually like that money back. Very eventually. If they're lucky. Slowly. With lots of interest. If they're even luckier. How credit cards actually work. Let's say your credit card has a $5,000 limit. Congratulations. The bank has decided that you're responsible enough to potentially ruin your finances by exactly $5,000. Every time you use the card, the bank pays for your purchase. Buy $100 of groceries, the bank pays. Buy a $500 phone, the bank pays. Buy a $2,000 television because the salesman said the picture quality would change your life, the bank pays. Your life remains mostly unchanged. Except now, your television has more pixels. At the end of your billing cycle, the bank sends you a statement. This statement basically says, "Hello, remember all that stuff you bought? We do." And then you have a choice. You can pay the full balance, or you can pay the minimum. And these two choices can lead to two completely different lives. Paying your credit card in full. Let's say you spent $1,000 this month. Your credit card bill arrives. You pay $1,000. Done. The bank gets its money back. You don't pay interest on those purchases, assuming your card has a grace period and you've followed the rules. Everyone goes home. This is the boring way to use a credit card. Boring is good. Boring is beautiful. Boring doesn't wake up at 3 in the morning wondering why it owes $17,000 to 6 different banks. Now let's look at option number 2, the minimum payment. This is where things get interesting, which is appropriate, because that's exactly what the bank is about to charge you. The minimum payment. You owe $1,000, but instead of asking for all $1,000, the bank might say, "Don't worry, just give us $30. Wow, how generous. You borrowed $1,000 and they only want $30? What a lovely bank. You should send them flowers. Except you still owe the rest. And now the bank starts charging you interest. This is where many people misunderstand credit cards. The minimum payment is not the amount you should pay. It's the minimum amount required to keep the account in good standing under the card's terms. It's basically the bank saying, just give us enough money to keep this relationship going. Because the longer you carry a balance, the more interest you may pay. And suddenly, that $1,000 purchase doesn't cost $1,000 anymore. It costs $1,000 plus interest, plus possibly fees, plus the emotional damage of looking at your credit card statement every month. What is interest? Interest is basically rent for money. You borrow the bank's money. The bank charges you for using it. Simple. Let's say you carry a $5,000 credit card balance at a 24% annual interest rate. That doesn't mean the bank immediately adds $1,200 to your bill on January 1st. Credit card interest is typically calculated using a daily periodic rate and your balance, then charged according to the card's billing rules. But here's the important part. High interest rates make debt expensive. Very expensive. And if you keep spending while only making small payments, you can end up in a situation where you're trying to empty a bathtub while the tap is still running. You pay $200. Then you spend $300. Then interest gets added. Then you pay another $200. Then your car needs repairing. Then you spend another $800. 6 months later, you look at your balance, and somehow it's bigger. This is when people usually stare at the statement and say, "How?" The answer is math. Very rude math. The credit limit. Now let's talk about your credit limit. The bank might give you a limit of $5,000. This does not mean you have $5,000. Please remember this. If your bank account has $500 and your credit card has a $10,000 limit, you do not have $10,500. You have $500 and the ability to borrow $10,000. These are very different things, but psychologically, credit cards can make those two things feel surprisingly similar. You walk into a store. You see something expensive. Your bank account says, no. Your credit card says, technically, and technically has bought a lot of televisions. Now you might be wondering, why would a bank give you thousands of dollars to spend? Because banks are kind? No, because the CEO saw your Instagram and thought, this person deserves a holiday? Also no, credit card companies and banks can make money in several ways. Interest, fees, and transaction fees paid by merchants when customers use their cards. So even if you pay your balance in full every month, the card issuer can still make money when you use the card. But customers who carry balances and pay interest, potentially much more profitable. Which is why your bank may occasionally send you messages like, congratulations, your credit limit has increased. Congratulations, you can now owe us even more money. What an achievement. Then why use a credit card at all? At this point, credit cards sound terrible, but they're not automatically terrible. A credit card is a tool, and like most tools, the result depends heavily on the person using it. A hammer can build a house. A hammer can also break your television. The hammer is not the problem. Although your television might disagree. Used responsibly, credit cards can have real benefits. Depending on the card and where you live, you may get stronger purchase protections, fraud protection, travel benefits, cashback, points, miles, insurance, and credit history benefits in countries where credit scoring systems matter. But there's one benefit people get particularly excited about. Rewards. Credit card rewards. Banks discovered something very important about humans. We love free things. Tell someone, spend $10,000. They say, no. Tell them, spend $10,000 and we'll give you 50,000 magical points. And suddenly, they're booking a flight to Japan. Credit card rewards can actually be valuable. Some cards give cash back. Some give airline miles. Some give hotel points. Some give rewards for groceries. Some give rewards for travel. Some give you access to airport lounges, where you can eat tiny sandwiches and feel financially successful. But rewards only make sense if you're not paying more in interest and fees than the rewards are worth. If you spend $10,000 and earn $200 in cashback, but pay $1,000 in interest, you did not make $200. You lost $800 with extra steps. The bank gave you a cookie and took your lunch. The biggest credit card trap. But the biggest danger with credit cards isn't necessarily the interest rate. It's how easy they make spending feel. Imagine buying something with cash. You have 10 $100 bills. You hand them over. 1, 2, 3, 4. By bill number 7, you're reconsidering the purchase. Now compare that to a credit card. Tap, beep, done. Your bank account doesn't immediately look smaller. The pain has been delayed. And humans love delayed consequences. Exercise tomorrow. Diet, Monday, credit card bill. Future me, present you, gets the new phone. Future you gets the bill. Present you books the holiday. Future you gets the bill. Present you orders food delivery for the 4th time this week. Future you would like present you to learn how to cook. This is one of the most important ways to think about credit cards. Every time you use one, you're making a decision for your future self. And future you doesn't get a vote. What about your credit score? In some countries, especially the United States, how you use credit can affect your credit score. Think of a credit score as your financial reputation. Banks want to know, if we lend this person money, are we ever going to see it again? Your credit history helps them answer that question. Different scoring systems use different factors. But things like paying on time, how much of your available credit you're using, the age of your accounts, and your overall credit history can matter. This is why missing payments can cause problems beyond just late fees. And this is also why maxing out your credit cards can be a bad idea. If your credit limit is $10,000 and you owe $9,900, the bank may look at that and think, And when a bank says, that's usually not good. The debt snowball that you don't want. Here's how credit card debt often starts. You spend $500 more than you can afford, no big deal. Next month, your car breaks, another $1,000. Then Christmas happens. Apparently, Christmas is a financial emergency that occurs unexpectedly. On the exact same date, every single year, another $1,500. Now, you owe $3,000. You're paying interest, but you're still using the card. Now you owe $4,000. Then $5,000. Then you get another credit card to help with the first credit card. This is usually the point where the situation has stopped being a financial strategy and become a very expensive game of musical chairs. Except when the music stops, everyone owes Visa. So how should you use a credit card? Here's the simplest rule. If you're using a credit card for normal spending, try to treat it like a debit card. Before you buy something, ask, could I pay for this with the money I already have? If the answer is yes, fine. Use the credit card. Get your points. Get your cash back. Enjoy your tiny airport sandwich. Then pay your statement balance in full by the due date. If the answer is no, be very careful. Because now you're not using a credit card as a payment method. You're using it as debt. And debt has a price. A good system is to automate payments where appropriate. Track your spending. Understand your card's interest rate and fees. Know your due date. Check your statements. And never assume the minimum payment means you're doing well. The minimum is the minimum. If your personal trainer told you the minimum exercise required to remain technically alive is walking to the fridge, you probably wouldn't build your entire fitness plan around that. Same idea. So, what is a credit card? It's not free money. It's not extra income. And your credit limit is definitely not part of your net worth. A credit card is simply a way to borrow money from a bank every time you make a purchase. If you understand the rules, pay your balance responsibly and avoid spending money you don't have. Credit cards can be useful. You can get rewards, protection, convenience, and other benefits. But if you start treating your credit limit like money, things can go wrong very quickly. So remember, debit card, your money. Credit card, bank's money. Pay the bank back on time and in full. Everyone happy. Don't pay the bank back. The bank introduces you to interest. And interest is the friend who comes over for one night, then somehow is still sleeping on your sofa 3 years later. So use credit cards carefully. Take the rewards, take the points, take the free airport sandwich. Just don't spend $5,000 in interest trying to earn a $200 flight. Because if you do, the bank didn't reward you. You rewarded the bank. And trust me, the bank is doing just fine. If this is the kind of content that helps you think differently about money, subscribe to the channel. Thanks for watching. Make sure to watch the next video.